Hello friends, this is Sanjeev Kaushik and welcome to my channel Methodical Trades. In this video, I will talk about 10 trading tips for beginners. I'm not going to cover any strategies, any indicators, or any ways by which you can take the trades, take the profits, take the losses, and so on. No. Here, I'm going to talk about 10 things that you must do consciously and unconsciously if you want to become a good trader in future, and also if you are planning on trading full-time for a living. So without any further ado, let's get started. Tip number 1, learn the basics. I cannot stress enough on the point of not learning the basics or ignoring the basics and just moving on to learn all the complex strategies, jumping right into, say, option trading, future trading, crypto trading, and commodities. So without even understanding the implications of all these products or markets or trading instruments. First, learn the basics. First, learn how the stock market works. First, learn how the commodity market works. First, learn how the options trading works, right? And something as simple as identifying support and resistance, which I have been talking a lot about on my video, knowing where to put your proper stop losses, knowing when to enter into a trade, understanding the importance of a particular trading strategy or a particular indicator. These are all the basics. Knowing what are the differences between a line chart and a candle chart. What are the areas where a line chart would be better placed in identifying the trading or investment opportunities than a candle chart? Why do so many types of charts exist? What is the implications of so many different types of time frames, right? You can chart for 5 minutes and you can also chart for, let's say, a month. So what's the reason for having so many time frames? Everything that you would see on a charting software, for instance, has a meaning. How much of it that you are aware of. Learn how the broker's system work. If a broker's system is very complex, probably it has got a lot of bells and whistles. How many of those functions in that system that you really understand? These are the real basics. You should understand the mechanism on which a stock market works. When does a stock get delivered after you've purchased it? What is a T+2 settlement system? How does the margin system work if you're going to trade in options market? So these are all the basics, and these are the things that you should know before you can even think of trading on a certain instrument or in a product. So do not ignore the importance of basics, and all these things that I've covered in this particular tip. You should make sure that you are very well across all these fundamentals before you can move on to learning strategies and other related things that will help you become a better trader or generate income from stock markets on a consistent basis. And that brings me to point number 2, that is, you don't need to know all the trading strategies. There are 12,000 ways, let's say, for making money out of stock markets. All you need is knowing just 2 ways that actually work. That's it. Even if you have just 2 trading systems that are generating you income on a consistent basis, you're all set throughout your life. You would only drop that strategy if it'll stop working. So let's say, and this is something that happens a lot with the beginners, they might be sitting in front of TV or they would watch a YouTube video. Someone will talk about some very fancy thing, let's say point and figure chart, or let's say Renko charts, right? So all these, funny looking ways of charting or really fancy ways of trading, and you would think that, oh my god, I'm missing out a lot on the ways of trading, and probably this is the best way of going about it. And then you would spend a lot of time learning new strategies. So a lot of time that a beginner spends on is learning new things. It is actually detrimental. Rather than learning new things, if you have just come across, let's say, one trading strategy, then try to stick with it, right? And that brings me to tip number 3, that is, give a trading strategy some time, right? Do proper testing on a strategy if you've learned it from, let's say, a YouTube channel, a book, or even if you paid for it. At least have 100 trades under your belt on a single strategy by following all the rules to the T before you can neglect or reject a strategy as if it doesn't suit you, it doesn't suit your personality, it's really not a profitable strategy, and so on, right? So give a strategy some time, and if it has, let's say, a success rate of more than 50%, you should learn to really refine the strategy further. Maybe there are some tweaks that you can do, and then your success rate can enhance from there. Or if you think that more than 50% is good enough for you, you're still making money consistently, then stick with that strategy. You have already found a golden way of making money from the markets. So do not look for too many strategies. Just 2 are good enough for you. If you know 4 or 5, you're probably already amongst the pros. And try to give a strategy a lot longer than you probably had planned initially before you neglect it completely as if it is something that does not work for you. And that brings me to tip number 4, and that is you don't need to trade all the markets, all the products, all the instruments. If you're, let's say, good at trading just in stock markets, you're buying or you're shorting, you don't have to do options trading, right? Or let's say you're already making good money from trading commodities, but now all of a sudden you're also enticed in trading crypto. Don't do that. If one market, one product type, one instrument is already working for you, why would you want to actually digress from there? No, just stick with it. You see, this is the best part about making money from stock markets. You can do the same thing over and over. And that's what professionals do. That's what good traders do. They never diverge, right? They have, let's say, 1, 2, or 3 trading systems that they work on. And if that trading system is flushing the trading signal, they take the trade and they move on, right? If the stop losses hit, they'll take their losses, go home. Or if the profits are running, they'll let their profits run. That's it. However, a beginner, they'll try to learn everything. They'll try to trade every market. They'll also trade cryptos, they'll trade commodities, currencies. They'll also try to do everything that they can in stock market using futures, options, cash market. And by doing so, they lose the focus on one thing that might already have been working for them. So do not just learn all these fancy things just for the sake of it. Learn the things that work for you. And that brings me to tip number 5, which is the most important tip in this video. And that is learn from the experts and respect their experience. You see, I'm not going to sell you anything in this video, and I never want to sell anything. I am a consistently profitable trader, and I don't really have to sell courses to make money. But if you're really serious about trading, then take it from me in writing. You do need professionals' help. You do need to be trained. You cannot learn about trading strategies without help from an individual. You can learn dozens of books. You can watch millions of YouTube videos, but what you actually need is someone to tell you how to trade, because that someone is not only going to cover the actual trading systems that work, but they'll also teach you the basics. You see, you need to know basics first. And if you would learn from a good training expert or a good trader, then what they're going to teach you is really the basic stuff. In fact, you'll be amazed how simple the strategies that they are teaching, how simple they keep it all by themselves. So respect the experience of a person who has been, let's say, training for a decent period of time, and also who himself has been trading for a decent period of time, who has seen multiple bulls and bear markets, and learn from them. It won't harm to pay them a few hundred or a few $1,000 if they are giving you something that you can use and start trading profitably from stock markets. That brings me to tip number 6, and that is keep it simple. That's it. In order to talk about this particular tip, I want you to do an exercise with me. I want you to close your eyes and think of a time when you're having food at a restaurant with your loved ones, your friends, your relatives, and you're really having a good time over there. Have you closed your eyes? Can you please do that? Good. Now, you're really having a good time in this restaurant. Now, you're thinking of the time when you were in this restaurant, having really good time, the food is good, the service is amazing, and maybe the ambience is really good, maybe the view is also good, it's by the beach, by the river, maybe it's raining or snowing outside, maybe it's in the mountains, right? Now open your eyes. Did you think of a time when you were dining in a McDonald's? You might have thought of the time when you were dining in a fine restaurant, but you definitely didn't think about having food in McDonald's. Why? The The service might have been good, right? These are quick service restaurants, so within minutes of you placing the order, you get your food. Usually the food is also not that bad, and the ambience is also not that bad. You may or may not get a very good view, but you can totally imagine yourself having food in a McDonald's with your friends or your relatives or your loved ones, right? But none of you, while closing your eyes, would have thought about McDonald's. You would only have thought about the time when you were actually in a fine dine restaurant. However, it shouldn't come as a surprise to you that McDonald's as a quick service restaurant is one of the most successful chains ever built. The stock of McDonald's has consistently outperformed all the indices, be it S&P 500, Dow Jones, or Nasdaq. Yet none of you thought about McDonald's. It's a very, very successful chain. In fact, they say that they're not in the food business, they're in the business of real estate because of so much real estate that they own, and those are all prime real estates. And yet, a business as huge as McDonald's and so widespread can still be run by 15-year-olds. When you go to a McDonald's, you don't really see people who are 30, 35 years old taking your order. It's usually a bunch of kids who are running the entire restaurant, and maybe a 15-year-old will be taking your order. You see, McDonald's keeps it very simple, right? The food items on their menu are limited. The prices are usually fixed. They would hardly change their food items, right? So very limited amount of food that you can have over there. Everything is completely set in terms of the standard operating procedure, right? The moment they'll take the order, they would know exactly what they have to do. So everything is set. Of course, there is a supply chain at the back of all this that is keeping the business running. But at the front, it's very simple, right? The seating arrangements are usually similar wherever you go. The way they're running the business is similar wherever you go in the world, in the McDonald's franchise. So the point I'm trying to make here is that the profitable strategies are often very, very simple. You don't need too many indicators. You don't need to know too many things about, let's say, a stock or a commodity in order to trade on it. The simpler you'll keep it, the more chances that the strategy will be working for you in a profitable manner. So do not try to learn too many things, right? Try to restrict yourself and try to say no to a lot of things. The most important thing for a trader is to be able to focus, right? Focus on the things that are actually working for him. And once you will start doing that, your profitability would also increase. So keep it simple. Do not spread yourself too thin. Do not go for very complex ways of trading. They're only going to hurt you. The simpler your strategy would be, the more chances that you will make money from stock markets. And that brings me to tip number 7. That is, don't be an average trader. What is an average trader? An average trader is the one who does more mistakes than a professional trader, right? He would do a mistake in taking his profits too early. He would do a mistake of not taking his losses too early. He would do a mistake of not putting stop losses properly, not putting the targets properly, entering prematurely, or entering into a trade where he should not have entered. So they do all sorts of different kinds of mistakes. How do you know whether you're an average trader or you're a better trader? Let's say you took a position and the stock dipped from, let's say, 150 to 75. Right? It's a 50% drop. And you shorted at 150. Maybe you did enter at the right time. But from 150, it has fallen to the levels of 75. It's a 50% drop. If you have been able to take 50% of this drop, which is 75 is the drop, it dropped from 150 to 75. If you were able to take 50% of the 75, which comes out to be 37.5 points in this drop, you are a really good trader, right? So whatever is the move that a counter has shown, if you're able to capture 50% or more of that move in profits, then only you will be a good trader, right? In fact, even professionals are not able to capture 100% of the move, but they would consistently capture 60 to 70% of the move in a counter. And what an average trader does is they barely capture 5 to 10% of the move. So what an average trader would have done in this example is they would have shorted at 150. Now the stock is down at, let's say, 135. They'll take their profits. They wouldn't wait for it to go down to 75. So what is it that they have captured here? Only 15 points, right? Which is only say 20% of the move. Not bad, but average trader usually take their profits too early because they don't know. Because for them, handling profits is just as difficult as handling losses. They just want to grab that profit. They don't even know where the target should be or how much patient should they be. It's very painful to see our profits that are huge to go to minimal profits and then go into losses. It's very, very painful. But if you have high conviction, you will be a better trader, you would be a professional. So you would know if your profits are going to losses. There is a reason why that's happening. You would still stick around in that particular position because you know that this fluctuation is temporary, but the move of 50% that you're anticipating is permanent, and that's the profit that you're aiming for. So what is a definition of an average trader? They'll be too quick to take their profits and too slow to take their losses. However, professionals do exactly opposite. They'll be very quick in giving back the money to markets in terms of losses. They'll be very slow in taking their profits. Right? So don't be an average trader. Do not try too many things and try to stretch your profit streak as long as you can and try to cut your losses as quickly as you can. That doesn't mean that you should cut your losses right away. No, you should have proper ways of assigning stop losses. I have spoken a lot about stop losses. I have created multiple videos on it. You should go out and check so that you would have proper idea of how to assign stop losses. And this brings me to the tip number 8, that is know when to fight or flight. When you're hitting a purple patch, when you are having a profitable streak, consistently you're making money, let's say 8 out of your 10 trades are actually going in profits and they're giving you massive profits. In that case, what you should look to do is you should increase your position size. Why? Because you're running a purple patch and you should try to maximize. This is the time for you to fight and fight aggressively. Be very, very aggressive during these times. Maybe you are able to pick the direction right. And it doesn't mean that all of a sudden your strategies are working better. Sometimes, yes, you might have refined something and your strategies are working better, and that's why your profitability and your consistency, your success rate has gone up, in which case it will not just be a purple patch, maybe it will go on forever. But it happens with every trader that sometimes they make a whole lot of money, a whole lot of good decisions consistently for many, many days and even weeks, right? So when this starts happening with you, while you have changed nothing in your strategy, it's just that you are picking the direction right, you're picking the trades right, try to increase that position size that you had so you can maximize the return during this period. Because just like day and night, even the times for traders change. After hitting a purple patch, they sometimes go through a loss-making streak. And during this time, a good trader, what he would do is he would reduce the position size. You should know when to fight aggressively and when to flight, right? If you think that you're not able to make money properly from the markets, even though there's nothing wrong that you are doing, it's just that markets are a little too aggressive towards traders, or they're just not as benign as they used to be, then what you should do is, in such harsh scenarios, you should reduce your position sizing. And if you have been consistently hitting streak of losses, then consider not taking trades for, let's say, a week or even a month. There are rules that you can build around this. Let's say in a given month, if you have lost more than 15% of your capital in losses, in such scenario, what you should do is you should not trade for the rest of the month. Or if in a week, if you have lost, let's say 5% of your capital, you should not trade in the rest of the week. Come back and recoup your confidence by trading smaller. And then when you start again hitting that profitable streak, increase your position sizes. When you will do that, you will know when to fight and when to flight. When you will be giving back losses, you will be giving lesser losses. When you'll be churning profits, you'll be churning huge profits. And that's how you should know when to fight and when to flight. That brings me to tip number 9, which is especially for beginners. Do not trade around market events, be it central banks talking about certain things, be it central bank announcement, election announcements, or company-specific news, company-specific events, industry or sector-specific events. If you're a beginner And if it is, let's say, a binary event, you don't know which way the counter can go, then do not trade when you're a beginner. If there are 50-50% chances for the markets to go anywhere, avoid those kind of events, right? It's really somewhere it's ingrained in human minds to try and predict and accordingly take the position, because you want to go for a home run, you want to hit a six. So in a way, you should try to curb your enthusiasm under such scenario and try not to trade, right? Try not to predict. Invariably, you would lose money if you will try to trade around key events where you don't know how the outcome can be. And even if you know how the outcome can be, unless you haven't really traded on similar events in past and you have seen that your predictions actually go right, then only you should put the trade on. And this is not something that is going to happen with beginners, right? That brings me to tip number 10, just as important as any other, and that is do not fight the trend. I've seen a lot of people, the markets are going up and they're looking for shorting opportunities, or they do exactly opposite. Well, whatever that you need to know about a market, about a counter, is already there right in front of you in terms of the charts. If the charts are telling you that it's going up, that the trend is upward, then more often than not, you should look for opportunities to go long. If the markets all of a sudden reverse and start going down, give them time to tell you the exact trend direction. But a lot more money is lost by fighting the trend rather than trading with the trend. Right now, as I'm shooting this video, the trend is still downwards. Pick whichever key index in the market that you want to pick. You will see that it is making lower highs and lower lows. Would you have any courage of going long in such a scenario? You might get some reflex rallies. Fine, you might even get some trading signals where you have to go long, but you will have to look at those signals with a little more suspicion. That's why do not fight the trend. And you don't really have to be a charting expert in order to see the trend where the market is going. If you would learn to trade with the trend, the chances are you will become a much better trader. In fact, even if you're learning the strategies, first learn the strategies that will help you trade with the trend. There are two kinds of strategies. One where you can fade the trend, that is, you would short the market if they're going long, and the second is where you go with the trend. And the second type is the one that you should learn initially. Going against the trend usually does not make as much money as you might think. However, most of the money that you would ever make in your trading career is when you will be going with the trend. So these are the 10 tips that I wanted to share with you if you're a beginner. As a trader, these are the things that you should look out for. You should keep in your subconscious as well as conscious mind. There are things that you will be doing actively in order to become a better trader after going through this video, and there are things that you would do inactively. However, you would still know why you're doing that because you learned about these tips from the video. If you think that I've missed out on anything, or if you think that there have been things that you have been doing wrong and you would not do those things in future after watching this video, do let me know in the comments. Thanks a lot for being with me, and I'll see you soon.